Let's take it to the floor show. We have Sylvan Capital Management Chief Investment Officer Michael Sansotera and the Fitz-Gerald Group Principal Keith Fitz-Gerald. Gentlemen, thank you for joining us. Michael, I start with you, and I want to congratulate you because you recommended on this show back in January Nvidia. You doubled your clients' money. Now what?
Yeah, we're going to hold on for a little bit longer. It's been thank you, appreciate that. It's been a great stock this year so far, and it's had its ups and downs historically. But the AI boom is real. Yes, there's a lot of hype. Yes, the stock chart looks scary, but the reality is this is a longer term tale. This business will grow for some time, and these guys are perfectly positioned. So we're satisfied with it. We're not buying or selling right now. We're holding tight. We've got large positions in both the Virtus Sylvan Large Cap Growth Fund and the Focus Growth Fund. So we're sitting right there, and we'll probably stay tight for now.
Keith, to me, it feels like the rally is a little bit more exciting right now. I don't know if you agree. I think the reason why is that it's being led by tech. It's being led by like the next cool thing for the internet for humanity, instead of, let's say, being led by financials as it was a few months ago. Thoughts?
I agree, and here's why. Because tech and AI is something you can put with hope and dreams and aspirations. We went after Nvidia in January as well. We went after Tesla. We went after many of the big tech names for the very same reason, because that's how you're going to change the world. Data like this is going to be the biggest recorded investment opportunity in human history. It's not going to slow down. It may be up and down. Maybe the rally's getting ahead of itself. We can debate those all day long. But the genie's not going back in the bottle, Lauren.
Well, then let me say congratulations to you too, then, Keith. And
thank you.
While we're talking, you also like Ford and you also like Tesla, and now an unusual tie-up between the two of them on, Ford EVs can use next year the Tesla supercharging stations. How big of a deal is that for you, Keith?
I think it's really cool, and I'll tell you why. Because this changes the calculus both for Tesla, which has been ahead of the game the entire time. I think Elon Musk knew full well that he's going to bring the rest of the industry along with him. The fact that Ford has now gone with it changes that stock in my mind. I think it's got an opportunity because now suddenly it's aligning with the leader instead of trying to fight it or play catch up. GM, everybody else has got a fundamental decision to make. Do they want to be at the table or on the menu?
Mike, let me bring you back in here. And what I also find astonishing is that the NASDAQ, particularly the NASDAQ 100, so it X's out the financials, it's rallied almost 30% this year. At the same time, you're seeing enthusiasm for tech as yields are moving up. Can you explain that?
Yeah, I think what you're seeing is in a time where there's been a lot of hand-wringing about where the economy is going. Are we running into a recession? If so, when? And if so, how deep? That consternation has boded well for the companies that can exceed investors' expectations and the ones that can still surprise people with better growth. And that's been a relatively thin number of companies. So you haven't seen a lot of breadth in the market despite interest rates. Because the places in where there's actual fundamental strength, those companies are outperforming. And then if you are just sort of plodding along or still trying to get your arms around what your reset of expectations should have been, you haven't perhaps done as well. So the market breadth has been low. Tech has been the place, broadly speaking, and the mega cap techs in particular have done well. And it's been somewhat irrespective of interest rate changes. The rest of the market kind of reflects the interest rate environment more so than some of the standout secular growth names.
Keith, why isn't the market worried about us hitting and passing the X date of June 1st for a deal on the debt ceiling? Why is there really very little, if not any, nervousness on Wall Street today?
I think that's an excellent question. To my colleague's point, the narrowness is the concentration on potential, not where we've been. I think there probably is a lot of worry under the surface. Certainly investors we talk to are worried about it, but they also acknowledge at the same time, Lauren, we're going to get through this. It's irresponsible, it's political buffoonery, but we will get through this. And that's the card you got to play, that the sun's going to come up tomorrow, not that it's going to set.
But what if we don't, Michael? I know we've done this, 78 times in the past. And even if we miss the deadline, the fact that they keep talking and they can move some money around and we'll be fine. But really? I mean, you have the warnings from Fitch. We're on credit watch negative. Bad things can happen. We've been through this before, most recently 2011, when we lost our perfect AAA credit rating by Standard & Poor's. And guess what? We never got it back.
Yeah, the financial crisis of 2008-9 and then the re-ratings in 2011 told, I think, the rest of the world that we had gotten a little light with watching exactly where our P's and Q's were, and we got religion, and that was a good 10 years ago. So we're going to continue to see these political grandstanding and last-minute negotiations. But if I was a betting man, I'd say that we get a deal before the 3-day weekend even starts. There's no reason to default. There's no reason to not pay our bills. This is strictly political behavior that we can look through. And you're right, it's scary, and a lot of investors are rightfully concerned. But the reality of the situation is we've never ultimately defaulted on anything. We're not going to start today, despite all the rhetoric. So you gotta hold your breath and walk through it.
Hold your breath and walk through. Well, I mean, I feel like it's a pure rally today. It's really astronomical. Final question, final topic, and that is inflation. So there's a 61 and change % chance that the Fed hikes for the 11th time in a row when they meet next month. But there's also talk, Keith, of then what? A hawkish skip. Maybe not a cut, but it'll be the final. It'll be the final hike, and then they pause. What are your thoughts on this?
Boy, who knows?
I know.
To me, this is like betting on a horse race when you don't have any horses in the stable. I think all they know how to do is hike rates. It's a foregone conclusion to me that they're gonna, even though the data suggests they ought to pause. And then after that, I think break out the magic 8-ball.
Keith, your reaction to my question is golden. On a Friday before Memorial Day weekend with the big rally, you're like, Lauren, I can't even believe you're going to ask me about the Federal Reserve and when they're going to pause, because we just don't know, and it feels like we're past the point of caring. Mike, wrap it up. Say what you like.
Keith wins. Yeah, that's the funniest. That's the answer you come up with.
Sorry, I asked the question, Keith.
I'll give it to him. All
right, go Nvidia, right? We'll end the segment with
Nvidia.
that. That's where the enthusiasm is. Keith Fitz-Gerald, Michael Sansoterra, thank you very much.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.